Hey everyone, this is June from Turning Point Life Investment, and this is your market analysis for December 4th, 2010. All right, let's take a look at the market here. We had a tremendous week, great start for the month of December. Three huge days consecutively, but you can tell on a short-term basis that the market is overbought short-term. You can see how the market just pretty much went up straight up 3 days in a row, and that's a pretty strong bullish move. Um, the thing you want to notice here is that the 50-day moving average held on as support. So that's pretty significant because if this 50-day moving average ever does break, or if the prices do ever breach this 50-day moving average, then that tells us something else is going on, maybe a possible change in trend. But for now, it's holding up pretty nicely above this 50-day, as well as the 11 or 117.50 level. So any breach of this price level or even the 50-day might tell us something else is going on here. Let me go into an hourly view just to look at the short-term basis. And as I mentioned, we're pretty overbought short-term wise on an hourly view. So I would expect some kind of a pullback, some kind of a either pullback or consolidation. And if I were to put on the Fibonacci's, maybe the 38% level is a good first target to aim for this market. It doesn't always have to fall back to that level, but at least it's a decent target to aim for. But I would certainly aim for at least a pullback towards this 20-hour moving average. So maybe around the 122 area. Okay, so at least that's the first level of support that I would look for if the market does consolidate or pulls back a bit. But overall, you can see we are pretty much right at this previous high in November. So hitting its head right against resistance, and it's funny how it stopped right there near the close on Friday. So if there's any more bullishness, if the market continues higher, I would say probably 125 would be your next level of a target, 125. But other than that, I would expect some kind of a pullback or consolidation for next week. Let me look at the VIX real fast. Now the VIX is still holding on to its dear support level right around the 1750 area. So any breach of this level will tell us that there's more bullishness to come. But at the same time, you want to be careful because this was the previous low back in April. So if the VIX breaks down any lower, that's actually kind of a cautionary note because that means the market's too bullish. Okay, so you want to watch for that. Even though we have a lower VIX, but at the same time, when it's too low, I would be cautious going long if that was ever the case. So watch for the VIX as a sign to tell you how bullish or how aggressive you should be.